So let's talk about the stock market. Today is March 18th, and where do we stand? Today, we are down another 6.3%. Here's the interesting thing. Going into the close, we actually bounced back a little bit, which is good. The Dow now well below 20,000. That happened today. We dropped below the 20,000 mark. And you see on a 3-minute chart, we went down, down, down for most of the day. And then there was finally some buying into the close. One of the key questions that everybody has right now is, how long will this last? When do we find a bottom? Here is how it works. You can just use some basic technical analysis, like drawing a trend line. So we draw a trend line from the low here. We're capturing what happens here in 2015 and 16. We go right there. So you see we capture 1, 2, 3 lows. And this is, when I did a video a few days ago, I told you I expect the market to go down to 20,000. Well, this is exactly what I saw here, that we will be at around 20,000. But we broke below that today. So that's kind of scary. Let's take another look at the chart. So there's another chart formation that you might have heard about. It is a so-called megaphone, where you're using a few lows that you're connecting, like this one and this one, and you're drawing a megaphone like this. So we also do the same thing right here. This is why the chart formation is called a megaphone, because it has 2 connection points here, then connects the high, and then it connects the low. And as you can see, we already touched the lower trend line of this. So here's the deal. As you can see, this today, we went to the lower trend line of this megaphone and then bounced back. That could be a good sign, because we already broke through the trend line that we could go draw going back to 2000, right? I mean, this is here a trend line that was broken. And if we continue to break below this level here, below 19,500 and close below 19,500, then we are in uncharted territory. Overall, we are right now officially in a bear market, as you know, because we already lost 30%. So where do we find the bottom? What I like to do is I like to look at 3 indicators. And the 3 indicators that I like to look at is the RSI, stochastics, and MACD. And as you can see, ever since we started going down, none of these indicators that are down here at any time dipped below the 50 line. So here we are still showing that the market is more likely to go down. So this is, of course, now a question: should we buy? Or are we in a financial crisis? How much worse can it get? And you see, this is, I think, very important, because people think that we are in a financial crisis. My opinion? No. This, what we are seeing here right now, is not a financial crisis. This is a health crisis with a very severe impact on the economy. So, do we have a financial crisis? No. Do we have a health crisis that is impacting the economy? Absolutely. Here's the difference. During a financial crisis, as we had in 2008, as we had it in 2000, companies are shutting down permanently. Right now, as of March 18th, companies are shutting down temporarily. However, here's the challenge. If we don't get over it quickly, then some companies might shut down permanently, which leads to unemployment, which leads to a recession. So right now, the key is to get over it rather quickly, because let me show you some examples of some companies who are in danger of shutting down permanently if we don't give them any stimulus plans, as you know, which has been announced, maybe possibly some bailouts, because I want to show you a few things that are quite scary. One of the companies that definitely is in trouble is American Airlines. You might have heard about this. So American Airlines, if you look at this, went down from $30 all the way down right now to what, $11. So down, as you can see, 70%. That is way more than the overall market. So keep this in mind, 70%, for example, for American Airlines. How we are doing here in comparison, the overall market right now, as of today, down 36%. So American Airlines down more than twice as much as the overall market. So United Airline is another airline being hit hard here. Went down from, what do we have here, $90 all the way down to $21, so down 75%. Then you might have heard it, especially today, Boeing got hammered. I mean, Boeing, America's darling, a stock, a Dow stock here, look at this, went all the way down. Today alone, 22%. So here it came down from $300 to $92, down 75%. One of the companies that I'm very worried about right now is restaurants. Who knows Dave & Buster's? Dave & Buster, its play, look at this, going from 48 right now to $4.87. Let's take a look at the percentage drop here. So at a percentage drop, here we are looking at, holy moly, 92%. So, I mean, if a company loses 92% of the value, this is where we have to be really careful that this health crisis with an economic impact is not turning into financial crisis. I don't think we have a financial crisis just yet, but it can happen really, really fast. So let's get rid of this. Vegas is shut down. So if we take a look at Wynn Resorts, so Wynn Resorts also hit hard here from $140 down to $40. So we have a percent decline. If you look at this here of 77%, very similar to MGM that's also operating, as you know, a bunch of casinos in Las Vegas, going all the way down here from 32, 83% down to $7. This is when a stock or when a company is in danger. Another one, looking at hotels, just a few more, and then we take a look at the overall and what you can do right now. So Marriott down, hit hard here, also down 60, 70%. If you look at the oil stocks, we talked about this, right? Oil stocks like CVX, Chevron here, being hit hard, coming from a high of 120 here, going down only 56%. But keep this in mind, the overall market is only down 33%. So who's driving up the market? Who is actually in this environment making any money? Now, not too surprising that retail companies like, for example, Walmart right now are killing it. I mean, look at this. Walmart has been jumping up. Why? Because right now everybody is rushing into the stores trying to stock up. Another company, Walgreens Boot Alliance. I mean, they are, look at this, today alone up 6.5%. We have companies like Kroger, the supermarket chain. They are up from $28 to $36. So, as you can see, there's always opportunity in these markets. The question is, which ones should you buy? Now, first of all, let's talk about the bigger picture. So the bigger picture right now, this is our main challenge. We have to keep companies alive. These companies, they're not out of business yet. But as you can see, some are down 90%. That is getting very, very dangerous. So we must contain the virus and we must find a way to help businesses. Large and small. As you know, small businesses are the backbone of America. So now the question is, what should you do? What should you buy? In short, nothing. And here's why. Pretty much everything is down. You see, sometimes people ask me, should I buy gold right now? No, you should not buy gold, because look at this. Gold, which should go up. When stocks are crashing, the flight to safety is that gold should go up. Look at this. What did gold do? Gold is plummeting as well. Crude oil today getting hammered another 15%. So crude oil is down. So should you buy right now crude oil stocks or gold stocks or gold? No, it's almost like catching a falling knife. The only thing that is up like crazy is the so-called VIX. This is the volatility index that is measuring the fear. And as you can see, the VIX right now it has levels that we haven't seen since 2008. This is showing you how much fear we have in the market right now. So this was in 2018 when we had this short crash. Here we go. In 2008, it went all the way to 95. We are almost there yet. So, I mean, everything is down. Now here, as long as the VIX, this volatility index, is up that much, this is where things will remain crazy. We just talked about it, right? So, therefore, here's what I think right now is a smart choice to do. If you are in cash, stay in cash. Keep your powder dry. Now, we are trading the binary power spreads. And you see, with the binary power spreads, we have made close to 50% since the beginning of the year. For those of you who are interested in this, I'm going to do a special training very, very soon. And I'll link in the description to this special training. But right now, I'm just curious, who here is trading the binary power spreads? And how are you doing with them? Are you having fun with them? Because in this craziness, that is definitely something to do. The other thing is, consider real estate. Yesterday, I had a really cool conversation with somebody who is considering buying their first house, and they were nervous, and they say, should we do it right now? Here's what I want to show you. This here is the 30-year fixed mortgage rate in the United States. As you can see, right now, mortgage rates are as low as they haven't been in forever. This chart here, which is from the St. Louis Federal Reserve, mortgage rates have never been lower. So what does this mean? Because that's very important. Some people are concerned that the real estate market could crash. However, let me show you this. This here is the S&P Case-Shiller index of the national home prices. Yes, home prices went down during the 2008 crisis. But remember in 2000, we had a financial crisis in 2000. See what happened? Nothing. Home prices kept going up. We had a dip. Who remember that we had this dip in the market in 2018, December 2018? Nothing. Real estate prices were going up. Now, why is this, and why I believe that right now is a good time to buy real estate? What do you think is happening if mortgage rates are at an all-time low? People who haven't been able to afford buying real estate might be able to afford it right now. Yesterday, the couple that I talked to, we did an example. They're right now paying $1,300 in rent. They would get a nicer house and pay less money, probably only $900 in a mortgage, because money is cheap right now. So this is why I believe that right now it might be a smart idea to get cash and think about real estate. So let me come back to you here. Just wanted to show you a little bit the bigger picture so that you know what's going on. So, but let's talk about the key question. What can you do right now? In short, 2 words for you. Get ready. And here's how. First, start learning about trading, because the markets will come back to normal. And when they do, there will be fantastic opportunities. Keep in mind, the market takes the stairs up, it crawls up, and then it takes the elevator down. But it will go up again, and when you know how to trade options, you will be able to not only make 3%, 5%, you'll be able to make probably 30%, 40%, 60% when you know what you're doing. Now, second, line up loans right now, lines of credit, home equity loans. Apply for credit right now. Credit is cheap, and over the next few weeks, it will be handed out like candy. If you haven't been able to get credit earlier, now might be a good time. Anyhow, so I wanted to share with you of what's happening here in the markets, what I believe you should do. Stay in cash, get ready, okay? And what I personally am doing. So I'm just curious, is this helpful? Because if it is, give me a thumbs up, and also make sure that you subscribe to the channel, because this way you get notified whenever I go live or I release a new video.